Joining us now in an exclusive interview is Brian Deese, National Economic Council Director. Brian, very good afternoon to you. Thanks so much for joining us.
Thanks for having me.
Congrats on this first step. We heard from Elon's report of the president speaking and him feeling very happy about it passing. How significant is this relative to what we've seen recently in other bills and what might still be to come? Does it significantly boost growth in your eyes?
Well, this is a historic milestone. This bill would be the most significant investment in infrastructure in a generation. And it would have a significant long-term impact on economic growth and the productive capacity of the economy. You heard the president talk about the independent analysis of this, looking at adding trillions in the size of our economy across time. But also, it will break practical bottlenecks that will actually get goods to market quicker across our ports, our airports, our bridges, and also bring our infrastructure into the 21st century. High-speed internet is now a requirement to be an effective participant in the economy. Getting that to all parts of our country will unleash new innovation, new small business starts. So this is a big deal. It's a big milestone. And obviously we have work left to do. We're going to move to the House now, but it's a big and important milestone.
Is there a risk that Speaker Pelosi delays things too much, even risks derailing them more significantly?
We're confident that we can move this package forward. This is a process, and throughout this process, we've faced questions about, can you move this forward? Can you move forward our physical infrastructure and our human infrastructure, both long-term investment packages? Is there a pathway? Is this going to be complicated? These are all this sort of normal parts of the congressional process. The really good news about today is we've seen bipartisanship work in the Senate. 69 votes. That's more a larger vote total than was actually for the interstate highway system in 1956. So we have some momentum here, and we're confident that we can get this done.
Brian, it's Morgan. Between infrastructure and, as you mentioned, human infrastructure, the social infrastructure, we're talking about more than $4 trillion potentially in money that's going to be deployed over the next couple of years. How can you be certain that this is not going to fuel inflation?
It's a great question, and I'm glad that you have an opportunity to discuss it. First of all, both of these packages are in packages to invest over multiple years. So you said a couple of years. These are 8 to 10-year investment packages, and by design, the point is to make the kinds of long-term investments in expanding the productive capacity of the economy that we've failed to make over the last decades. Secondly, and crucially important, these packages are paid for. The president went out to the American people and said, these are investments we need to get done, but we also need to responsibly pay for them and do it in a way that actually over the long term would reduce deficits. So it's very different from the conversation that we've had over in the last administration, where we added $6-8 trillion to the deficit in tax cuts and other spending that without even an effort to pay for them at all. And the last point on inflation, I'm glad you raised. The investments in infrastructure, in breaking bottlenecks, moving goods and services more easily across the country, will reduce prices. The investments in human infrastructure, in increasing labor force participation with affordable child care and care for the elderly, that will actually increase labor supply and reduce price pressures going forward. So this is a prescription to actually grow the economy and reduce price pressures over the long term.
Yeah, I mean, I think it's a little bit up for debate in terms of how much will ultimately be paid for, depending on whose estimates you work with right now and how much revenue is ultimately generated. I do see where you're coming from. That being said, the fact that we'll take infrastructure right now that's going to be deployed over the coming years, how quickly are we actually going to see some of those improvements, some of those projects become realized on the ground?
Our focus is not only on shovel-ready, those projects that can deploy immediately, of which there are a number, and that's important, but also shovel-worthy. The big projects of national economic significance that may take more than a year or two to get done, but when we do them, they have significant economic benefits. So take the commitment that we will deliver in this legislation to help rebuild and refurbish the 10 most economically significant bridges in the country. These are multi-year investments. A bridge like the Brent Spence Bridge that connects southern Ohio with Kentucky. But if we get that right, the amount of commerce that flows over these big bottlenecks is extraordinary, and the economic opportunity unlocked is extraordinary as well. So The focus is on those shovel-worthy projects that will take some time. We'll be able to break ground in the relatively near future, but will deploy across time. That's the kind of multi-year infrastructure investment that we've failed to make for so many years because there's been this short-term attitude that we can't make long-term investments. We're trying to turn that around in this legislation.